Hi, everyone. This is Tamiya Robles from FixMyCreditNow850.com. Welcome, welcome, welcome. We're doing another Wednesday Zoom Live. Today we have two speakers today. So we are speaking with Milissa and PJ. Milissa is a mortgage broker and PJ is a mortgage lender. And they're going to talk to us about the process. I'm actually going to turn my camera off throughout the call because it seems to freeze here and there. Everybody's contact information is going to be in the chat. If anybody has any questions, feel free to just hop on during Q&A. And if it's prior to that, just put your questions in the chat. And then at the end of the Zoom call, we'll be able to address your questions. You will be able to find us on all social media platforms. I'll post that up as well. But in the meantime, there you go, Milissa and PJ.
Hello, 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 fam. I just wanted to make one correction. I'm not in mortgage.
Oh, I'm sorry. Sorry.
So I am a real estate broker. I'm a real estate broker in 4 states, but I can help you in absolutely any state. So if you need help in any state, contact me. Like Tamiya said, she's going to put both of our informations up. And I won't hold you long. I will say that off bat. I don't want to hold you long. I just want to give you some information. If you all would like any information, then hit us up. And then I want to bounce everything off me and PJ. I'm not going to talk a long time, and then he's going to talk a long time. He might chime in on something that I'm saying, and then I'll shut up. So yes, I'm Milissa. I'm from California. I currently live in Georgia, but like I said, I'm licensed in 4 different states: Georgia, Florida, South Carolina, and Alabama. So even though I'm only licensed in those states, I can help you in absolutely any state if you give me a call. And then I'll let PJ introduce himself.
All right. Hey, good evening, everyone. My name is PJ Legrier. I actually live in Atlanta. I've been in the mortgage business for 18 years. So I'm one of the old vets in the business. So I've seen it all, been there, done it all. And I specialize in self-employed borrowers. I do every borrower, but I specialize in self-employed borrowers. So I'm licensed in Florida, Georgia, Tennessee, Texas. But I can do deals in other states, but those are the states that I'm licensed in: Florida, Georgia, Tennessee, and Texas. There you go, Milissa.
Just wanted to start off talking about our topic, which is you thinking about buying a home. Anybody who has thought about buying a home, first of all, let me go backwards. If you're a chronic renter, you need to think about buying a home. You need to consider it. I've heard a lot of people say that I don't know if I'm ready to pay a mortgage. If you're renting a home, you're paying somebody's mortgage. You're just not paying your own. So the first thing to do is to think about becoming a homeowner. Once you've thought about becoming a homeowner, that's when the little things in your head need to like start running. Like, what do I do now? Who do I contact? What am I supposed to do? What are, you know what I mean? That's what this is about. That's what we want to talk to you about right now. I'm thinking about it. I'm considering it. Is it a possibility? Is it for me? Is it in my near future? How long in my near future? What steps should I be taking? That's what we want to give you a little bit of information about today. I'll just start off. A lot of people come to me first, and the first thing they say is, I'm thinking about buying a home. Can you show me houses? And I like to say, no, ma'am, no, sir. That's not how it goes. Let me tell you how it goes. How it goes is steps. When you're thinking about buying a home, I consider that to be the first step. The second step is contacting a lender. You do not know what you can afford. You do not know if you are even able to buy a house. So what are we going to see houses for? So that's my first step. My first step to everybody, even if you're only considering it, even if it's 6 or 9 months down the line or next year, I still tell them to contact the lender. I still think you should have your credit pulled, and I still think you should talk to PJ, because he's going to give you a game plan. He's going to give you a blueprint. So that's, I'm going to pass it over to him as if I would pass you over to him right now, as if you were my client.
Right,
And he's
right,
going
right.
to share what he's going to do once I say, oh, you're ready, you're thinking about buying it. Okay, let me send you over to PJ.
All right, cool. So yeah, so Melissa's right. We run into a lot of clients who they'll come and they've heard everything from their parents. They heard everything from somebody that bought a house 10 years ago that's not in the market anymore. But like you said, it's a difference in thinking about buying a house and preparing to buy a house. A lot of people think about buying a house. That means you more like you ain't saved any money. You know, you need to prepare to buy a house. So if it's gonna be tax season, understand when you buy a house, the biggest investment in your life is home ownership. So when you go to buy a house, understand you need to live a very frugal life until you close. You need to save. You need to change your habits, going out to eat and stuff like that. Can you sacrifice that? Because that money you're spending out to eat, you can save that money. But what I'm saying is, preparing to buy a house, when you come to us, you can't come to us with, hey, I have no money and I want to do some down payment assistance, something like that. It doesn't work like that. Because I can tell from having a conversation with you, if you prepared to buy a house, or you just kicking the tires, about buying a house. Now, another thing is this right here. I hear a lot of people talk about, I heard now it's not a good time to buy. Well, if you don't own a home, then how would you know when it's a good time to buy? I mean, the rates where they are now are the same rates they were 5 years ago. These are where the rates are now. We were just spoiled with the 3% rates and the 2%. We were spoiled with that. That was because of COVID and the recession. That would never happen again, as far as, unless we have another recession or another pandemic. You're never going to see those 2%, 3% rates again, because there's no money to be made from the banks on lower rates like that. So if you notice, back then they started cutting a lot of programs out. So basically, prepare to buy a house, prepare to make a sacrifice, and understand that. Now let's talk about the mortgage payment, like Melissa was talking about. If you're renting, everything has changed. If you've been in that same house or apartment for 3 years, the world around you has changed. Rates, not interest rates, the cost of a house has changed. Your grandmother's house, that's a ranch style house from the 70s, all brick. Guess what? That house ain't 75, 80,000 no more. The house is 250,000. So understand this. If you're renting you're paying $900 a month. I'm going to ask you, realistically, what kind of mortgage payment are you not wanting to go over? So when you tell us, well, I'm paying $1,100, but I don't want to go over $900. Well, unfortunately, depends on what you're looking for. Sometimes you're going to be upset because you can't find something in that monthly payment. Understand this: when you're renting, I tell everybody, whatever your rent is, add $300 to that, and let that be your mortgage payment. Because when you're adding $300, you're adding PMI, you're adding homeowners insurance, you're adding property taxes. Just add $300 to that renter payment that you're making. If you're paying $2,000 in rent, add $300, and that's the price point you want to look for a house. Like Melissa was saying, once I don't do hard pulls on credit up front. The first thing I do is a soft pull. A soft pull would never show up on your credit report. So I come out the gate, I do a soft pull. After that soft pull, I can look at your debt to income ratios and I can tell automatically if you're going to get an automated approval. So there's no need for me to do a hard pull until you go up under contract. So, so if you're an individual that you want to count overtime and stuff like that, and some of your income is kind of tricky, or if you're self-employed and you need these tax returns, whatever, then what I'll do a hard pull and I'll put you into underwriting as a pre-underwrite based on a certain loan amount, purchase price rather. So I do things like that. But again, like she said, it doesn't matter if you're buying 6 months down the line. That means that you should go ahead and get your credit pull, soft pull. Now we get on the game plan, you know, how much money you need or whatever, and you start preparing because it's 6 months down the line, 4 months, you start preparing to buy a house. You know, like I said, tax season, if you know you're getting a refund, let that refund help you out with your down payment. So yeah, so we make sure we got to put everything in perspective. We got to change our priorities. So because the biggest investment again in your life is home ownership. Now let's go back to one other thing, and I'm gonna pass back over to Milissa. when your mama and them, their interest rate, they're paying this and on their house, their interest rate is this. Well, guess what? When you say now, well, they said now is not a good time to buy again. Well, guess what? If that's the case, it's never going to be good enough. It's never going to be a good time to buy for you. The terms that me and Melissa use in this market, you date that, you marry the house and you date the rate. Okay. So I'm saying that again. You marry the house because you're going to be in there 30 years, but you date the interest rate, meaning that when the interest rate drop, you refinance. All right, you keep in the house, but you refinance the interest rate. So you marry the house and you date the interest rate. So that's one of the things that we usually convey to prospective buyers, things like that. So secure the property. If that's your home, that you everything you want is at their home, don't worry about the rate. Secure the property, come back and refinance. But go ahead, Melissa.
And before I move on to my next topic, I just want to bounce off of people telling you what's a good time, how it's not a good time. A couple of months ago, maybe a year ago, when the interest rates were a little bit lower, you were paying a lot more for the house. The house was not even appraising, and I don't want to talk over people's head, but I do want to let people know this. The house was not even appraising. If you were getting a house for $200,000, you had to bid $250,000. The house was not even worth $250,000. You had to bring $50,000. You were calling your grandmother, your uncle, your sister, your brother, asking everybody to help you overpay for this house because you were beating people down just trying to get this one house. So even though the interest rates are a little bit more, you're buying a $200,000 house at $200,000. And not even that, I don't want to get people super excited, but I'm getting it lower. I'm getting the $200,000 house at $195,000, at $190,000. So you're going in with equity.
Mm-hmm.
You couldn't even think about, a couple of months ago, you couldn't even think about asking a seller for concessions. A concession is like when they help you on closing costs. You could not even don't even fathom that. Wasn't going to happen.
Right.
Now you can, especially in certain areas. In different areas in Atlanta, you might, you can't ask for that much because maybe that's still like a booming area. Outside in these suburbs, I'm getting them to pay for a max closing costs. You know what I mean?
Yes.
So is it a good time? When people ask me, is it a good time? Heck yes. I actually prefer this. I don't like fighting people for one thing. So I would prefer this market over the lower interest rate market, in my opinion. That was like when you went to Walmart and you found like that sale item and everybody is in the bin digging. I don't like that market.
Right. Those lower interest rates are not sustainable. And
yes.
it's too good to be true, but you better capitalize on it. It's gonna go,
yes.
It'll go the way,
And that was if you were lucky enough to get the house, because even though you might have got pre-approved with Mr. PJ back then at that, and you're interest rate was only 3%. Now you have to go fight 20,000 other people for one house. And so did you even get the house?
Right.
And that's what people were, I don't like it, in my opinion. So when people ask me, is this a good market? Yes, I would prefer to buy in this market than that market. And if for just the equity alone, I would prefer to buy in this market.
Yeah, but you're right, Melissa. And I promise you, we've been seeing it. We've been seeing these appraisals coming back $15,000 higher than the purchase price now. So it's
yes, that's like money in the bank.
Yes, yeah. And if you're in an area where the seller was not paying any closing costs, because the house is appraising for $10,000, $15,000 more, you're able to finance in your closing cost. So you're just bringing your down payment, so that, I mean, it like she said, now's the time to buy.
Now is the time. Listen to us. So,
right.
Yes. My next topic I wanted to talk about was putting your thoughts into actions. But then I think PJ covered some of that too already when he was saying once you call him, like even if your time frame is not for 6 months, 6 to 9 months, 9 months to a year, putting your thoughts into action. So we moved it from I'm thinking about buying a house. Now I had him pull my credit, but let's say either something needs to come off my credit, or let's say he said your credit is good, your debt to income ratio is good, but I need you to save money. Your actions need to be whatever he told you to do. Need to be whatever came from that credit report. It could be that everything was awesome except for you saved no money because you didn't know if you were going to be buying a home. Put those thoughts into action, whatever that action is. The action could have been when he said stop eating out. The action could be to discipline yourself. Whatever the action is, do whatever he said the action is. That is like super, super important. And I don't know if you guys are catching this, but you still haven't really made it to me. And so many people think that I'm like the first point of contact. I'm not at all. I'm not the last point of contact, but I'm like double dutch. Both of the ropes have to be swinging before I even jump in. Yeah, you haven't even made it to me yet. We don't even need to be looking at houses yet. And my favorite thing to tell people when they think I'm mean, but I don't even care, is do not write that list yet. Don't write the list at all, in my opinion. But for sure, do not write that wish list until you have spoken to PJ. Why are you writing a wish list, a want list, whatever you want to call it, my dream list? You don't even know what the game plan is. Instead, let's write a list of things that I'm going to do to prepare to buy a home. I'm going to stop eating out. I'm going to do whatever he told me to do, to get my credit together. I'm going to seek a credit repair specialist. I'm going to call tomorrow. I'm going to do whatever. That's the wish list that we need to be putting together, in my opinion.
No, you're right. And to piggyback off what you were saying, is that like she said, those thoughts into actions, when we run numbers and we say stats, right? They say men lie, women lie, but numbers do not lie. And I promise you, if you are seeking down payment assistance, you're more than likely, and some people take this the wrong way, you're more than likely to foreclose on your property because you don't have any of your own money invested into this transaction. So you're using other people's money. They say you're supposed to get rich by using other people's money, but this is not the case because nothing's free. So what you guys are doing, you guys are more than likely to foreclose. All right. So when I say that, if you got your own money, even if it's just a down payment, Melissa got the seller to cover your closing costs. So you got the down payment. You're less likely to foreclose on your property, because, you're going to think, man, I done put 10,000, 7,000 in this thing. I can't just let that go. But guess what? If you didn't put none of your money into it, so just keep that in mind, is that the thoughts into action, be intentional with your actions. And that's a term that I use a lot. You got to be intentional with your actions. So you have to train your immediate environment. You got to train your immediate environment to get on board with you, because your priority now is trying to save to buy this house. So if you have a partner, domestic partner, whatever it is, husband, wife, whatever, be careful. Everybody's not happy for you. Everybody got the same
Oh my God.
ambitions and goals for you. So when you go out there and you want to buy this house, you're gonna be surprised when you're not gonna get that positive feedback you thought you was gonna get from your immediate environment. So remember, when you're thinking about a house, this is on you. These are your dreams, your goals. So like I said, set your priorities straight and think about it. If somebody don't respect you because you're not going out to eat, you're not doing this because you're saving to buy a house, if they're not respecting you, then hey, you got to question. You got to question them. If anything, they should take your lead, and follow you. So yeah, I just want to put that in there, Melissa.
So one of my, oh, go ahead.
Can I chime in? I know this is you guys.
Yes.
So you guys, what you both said kind of triggered me, because especially Melissa, when you were saying you're not the first stop. And as a credit repair specialist, I have to say the same thing. I'm not your first stop either. And usually, in a perfect world, you got to go see the lender first. And the reason why I say that as a credit repair specialist is I eat, sleep, and breathe credit repair. But if you see a lender first and you're trying to quickly purchase a home, he's going to tell you specifically what needs to be removed. Then you tell me what he says, or however we communicate, he tells me, you're CC'd on the email, and I only focus on those things that he's talking about, right? Which will shorten up the time that you're with me. And then once we're done, because I do work quickly, I get results rather quickly. I don't control the bureaus. We are at their mercy, but how I dispute is fast enough. And then I can send you back. And as soon as you're done, you see your score go up, you will practically instantly get your pre-approval from your lender. If you don't go to your lender first and you come to me, I'm going to go into full credit repair mode. And I don't know when you're going to get a house. Like, I want to fix everything from the rooter to the tutor. You know what I'm saying? I want to fix names and addresses, and they didn't do that right. And that's not going to help you. So see your lender first. And usually how I get people is somebody, mom and dad and them, Kiki and Ray were like, oh, you should get your credit fixed. Tamiya's cool. Yes, Tamiya's cool, but you don't know what I was doing to Ray and Kiki's credit. They weren't trying to get a house. They were trying to get credit cards. They were trying to get a car. They just wanted credit. You're trying to get a house. Go to a lender first, and then ask them and Melissa mortgage questions and lending questions and real estate questions. I don't have the answer. I'm only credit repair. So I just wanted to put that in there too.
And I try to tell people that, and they actually think I'm being mean. Like, I don't know why. I think, I don't know if it's TV or whatever has programmed them to think that they're supposed to come to the real estate agent first because it's a real estate transaction. And I have to end up telling them the same thing. This is not how this works. You know what I mean? I'm not even the person who who you should be talking to at this point. And then I actually tell them, especially because some people will tell you all of their business. So that if they come right out and tell me, that they have credit issues, and I said, oh, we'll end up speaking to a credit repair specialist at some point. You'll end up speaking to me at some point. And I said, don't take this the wrong way, but I'm about to turn you over to the lender. And I technically I don't know when I'm going to hear from you again. And that's fine. And that's fine, because he's the one that's going to take you by the hand now. He's the one that's going to put you on the right path. He's the one that's going, and the right path might be stopping by Tamiya, coming back to him. And like I said, I might not even have a conversation with you for a month or two. I might say hi. I might send you a text saying hi. I just wanted to let you know I'm still here. But I might not even contact you for like 1 or 2 months because that's not where we were on the map.
Right. Now you're right. And then, like I said, when you come to me and I do a soft pull. Now I have this simulator. Not all lenders have it, but I have the simulator that does the live. You know, when I can go in and it makes it easier. It takes out the guesswork. Just like Tamiya was saying, when I send you to Tamiya, it's easier if I can tell Tamiya, hey, these two items, like she said, these late payments need to move, and it'll move her score, his or her score. Or, hey, this $20 medical copay needs to be deleted from the credit report, you know, and we automatically know, you know, you might get lucky and it happens real fast, but you know, that's where we set our realistic expectations and our goals, right? Short-term goals. So that's what we try to do to make, as a team, we try to make it seamless and easier for each other. So again, I can run a credit simulator and I can do a seasoning on there, like 1 or 2 months, to see if your score is going to change on its own by itself. Tamiya's talking about disputed accounts on there. Well, we have to be careful. Like Tamiya was saying, if you go to her first and all of a sudden you want to remove the disputes, guess what? You might have a 602 score. You remove the wrong dispute, and that's a 540 score. So what I do is I go into my simulator and I'm if the disputes are total over $1,000 combined. If you got 4 disputes and they all combined total over 1,000, now we got to go in. We got to remove a dispute to get you back under $1,000 total amount in disputes. But guess what? When I go to plan with that simulator, remove this dispute, your score drop. We know we can't remove that one. So then I find the one that we can remove that's not going to affect your score. Then guess what? Then that's when I'm able to tell Tamiya, like before she goes into full throttle, I'm able to tell her, hey, this is the only one we need to remove. Do not remove the disputes on the other. Otherwise, it's going to be a while before they get that score up. So it's just stuff like that. As a team, if you notice, we all bounce off each other, make each other's life easier, you know, and that's, I just want to put that in there, you know, so they'll know, piggybacking off what Tamiya was talking about. So, yeah.
And then I have one little short story. So I have a realtor friend, and she had posted this on Facebook. She had a lady to contact her, and she contacted her, and she wanted to buy a house. And it was like tax season of like last year. And she said the lady was about to pay off some stuff because she wanted to buy a house. And she said somebody told her, contact your real estate agent first, don't pay it. And then so the real estate agent was like, contact the lender and see if, first of all, what were you going to pay off? She was going to use $10,000 from her taxes to pay off medical bills. Medical bills. Look at PJ. You know why? She had other stuff that she could have paid off that they would have cared about. The medical bills was like the smallest thing on the lender's like radar. Basically, the lender said, if had you paid that $10,000 off of past 5-7-year-old medical bills, they would have done nothing. Instead, use it for your debt to income. If somebody in her ear, she had good family members. If somebody in her ear did not tell her to call the real estate agent, and they only told you to call who they knew. So if they didn't tell her to call that real estate agent and she would have made that mistake, she would have gotten screwed. She probably wouldn't have even got the house in that time frame that she wanted. So call the right people, get with the right people, ask the right questions. That's all I'm saying. Like ask. There's no wrong thing, whatever. It's never too early to start. Please call us. Please call us for anything. Even if you're calling me, like I told you, that wasn't, I'm not in at this point, or you're not supposed to call me at this point. I don't even care. Call me so that I can point you in the direction of who you're supposed to be talking to, of who you're supposed to be seeing at that point, talking to at that point. Help you, and I'll help you with the blueprint. Say you don't understand it, and PJ's busy. Yes, you can call me. We can walk through it.
Yeah. All right, Tamiya.
Okay, well, that sounds great. That I think people need to hear. I know people need to hear that. I know my clients need to hear this. When we're done here, I'm going to personally send them each this video, um, just to help them, even former clients. I'm just going to send it to them just so they can see. They need to hear this because, I don't think they want to just take my word for it. I had one client. This is what I'm getting. A lot of clients love what I do to the point that they don't want to leave. And as much as I love talking to them, it's still a job that I have to do, and they have an original goal that they need to meet, and I can't help them with the rest of their goals. I had several clients tell me, like, you know what, you did such a great job. Just keep fixing my credit. There's nothing to fix. There's really nothing for me. And I'm telling you, there's nothing for go get your house. Don't just sit on good credit. Get your house. Like, it's time, get your house. Like, you know what I mean? So, I mean, that's the only some of the downside. But I think if they hear something like this, that like on the Zoom call, it will make sense because it's not just coming from me. It's coming from you guys are the professionals that have the background and the education and the history. Maybe that will make sense, I guess, hearing it from you guys. I don't know. But, you can't stick with me. You can't stay with me. It's not going to help. What's going to help is you getting your house, not your car, the house, not your credit cards, the house.
The only one that's going to give you, well, I'm not going to say the only, maybe you buy a nice car, like a tradable car, but the only one that's going to give you equity when you go to sell it is the one that should be most important and top of your mind, in my opinion.
It's a house. Mm-hmm.
Right.
I had clients tell it's a pattern. Like I have a client, they have former clients. They came to me with like a 600 as a husband and wife. In 30 days, I got them like a 750 credit score. I mean, I knew what I was doing. It was something simple that needed to be done. They just didn't know. And they really wanted a house when they started out. And then they saw their credit score and they were like, oh, this opens up so many possibilities. You know what opens up more possibilities? Your front door to your new house. That's that's the door that opens all the possibilities. And I'm so serious. There's so many things you can do with a house. Like you can be broke and have a house and sell it and then walk away with more money than you put down. That's the equity. You know what I'm saying?
Exactly.
You can't
you're right.
With credit cards in a car and whatever else. You get the house first, even if you want to borrow from the house to get the car and things like that. There's other way. You can't do that with a car. I digress, but I get that often. I have several clients that are like, I had clients that were mad at me and canceled me out because I refused to keep going when they were supposed to get a house. But
and I've had clients, and just like Tamiya was saying, I have clients that come. They might have a $38,000 vehicle, and a car note is $750, right? But like you said, they buy that house. A lot of times they already got instant equity, But the thing about it is, I said, hey, in 12 months, you're going to owe $30,000 on the car still. But hey, a lot of times these clients, they can do an equity line on their property, or they can do a refinance, a cash out, and pay off the car. I'm doing a refi right now for a lady. She's been in the house for 7 years, and she was smart. She ranch style with a basement. 7 years. She never refinanced. She never did anything to the property. That property is, I swear to God, it's $300,000. It's appraised value, $300,000. She's doing a refinance. She's going to cash out $125,000, and she still is going to have 80% equity in the house. So she's going to cash out $125,000, $124,000, and still have 20% equity in the house. She's taking that money. She's going to finish the basement, which is going to add more value. And she has 9 credit cards. Pays them on time every month.
Nice.
But I was like, 9 credit cards equal 25,000.
Mm-hmm.
And then she got one card that's about to be paid off in less than 10 months. Mm-hmm. But she got another $25,000 card note, has a $600 some payment. Mm-hmm. But the credit card debt by itself, y'all, the monthly payments on the credit card, the 9 credit cards, that monthly payment combined was like $1,100. So if you take that, she's paying all those off at closing. Mm-hmm. And she's paying off that card note. So she'll still have enough money left over to do, mm-hmm. To renovate the basement. But her instant monthly cash flow mm-hmm. increased by $1,800. Mm-hmm. So her regular
mortgage payment,
her regular mortgage payment has always been $1,250 on her property. Where her new mortgage payment, with cashing out the $124 with 20% equity, no PMI, that new payment is going to be $1,781. But remember, her instant monthly cash flow that she created by paying off this stuff is $1,800. Mm. She just paid off her debt. Now, the money she saved on the credit card and the card is her mortgage payment, her new mortgage payment. Mm-hmm. So she did, like Tamiya said, she did it the right way. Yeah. And I mean, and now she's, just remember this: a house payment technically is not considered debt. When some people say they're debt free, they're not necessarily saying they don't owe anything on their house. Mm-hmm. They don't owe any credit card debt. They don't owe any car loans. Mm-hmm. They don't owe anything like that. Mm-hmm. That's debt free. Mm-hmm. Home ownership is not considered a debt per se. Mm-hmm. So yeah, but I just want to put that out there because Tamiya, you hit the right on the money. How the priority should be. I'd rather have the house and not the car that luxury car, because a lot of people in the luxury cars, they ain't pulling up to home ownership. And so I'd rather drive something small, economical, pulling up to my house. Mm-hmm. Because your house a car is not a net worth. You got that luxury car, your net worth did not increase. Mm-hmm. But remember, when you see these people, hey, what's their net worth? Part of that net worth is the home they own. Mm-hmm. How much is the home worth? Not how much you owe on it. How much is the home worth? That's part of your net worth.
Mm-hmm.
So,
Good words.
Mm-hmm. Mm-hmm. Yeah, I agree. I definitely agree. So hopefully more people will get this. I like how this call went. It's more personable. So it feels like we're all talking to the clients directly. So hopefully they'll get it for sure. I'm pretty sure they will. For sure, definitely. Okay, well, we can wrap this up if you want. Do you guys have anything you want to say in closing, or did you have anything additional you want to say, Milissa? Any more points?
I don't. I don't have much to say. The only thing I want to say to close out is do not hesitate to call me and PJ with your questions. Like I said, if it's just a thought in your mind, if the gear is just beginning to spin just a little bit, call us. Mm-hmm. It could be, don't think it's a stupid question. If you think you have an inkling of a question, call us. We'll answer.
Mm-hmm. Right. And one thing I wanted to add, last thing is, and Milissa tell you, hey, 2 things. First of all, home ownership, buying a house should be a pleasant experience. All right. It should not be a nightmare. It should be a pleasant experience. All right. So again, we close most of our deals in 3 weeks or less. If I put you in a pre-underwrite, then the only thing they're waiting on is insurance, title, and appraisal. So you're closing 2 weeks on those deals. So it's supposed to be a pleasant experience. It's not supposed to be miserable. So I say that because some people just don't understand, and they come in thinking that it's going to be hard and it's going to be a miserable experience. But that's not the case. Another thing is your feelings, your emotions. I promise you, you're going to have butterflies. You're going to be nervous. It doesn't matter who you are. This could be your 8th house that you're buying. You're going to have the same butterflies in your stomach, the same nervous feeling. You can have $10 million in the bank and buying a $100,000 house. You're still going to have the same nervousness, the butterflies. That's just natural. It's a natural feeling. So I just want to let everybody know that. Don't think it's something that you're going through. No, everybody goes through the same thing. Mm-hmm. I went through it, and I'm the bank when I bought my so I mean, so yeah. So yeah, that's all I had to say right there.
Okay, excellent. And as far as credit is concerned, don't think your credit is too bad. I know credit repair specialists do not have the best name. It is what it is. I'm very trustworthy. A lot of people, I'm not hard to find. You can look me up. You know what I mean? I'm easily accessible. I don't steal anybody's money. I'm very honest. And if I need to just tell you no, I don't mind telling a person no, but I can get anything off a credit report. So don't feel like because you have a bankruptcy or because you have child support. And to be honest with you, again, this is why you need to speak to PJ, talk to the lender, because my first home, I had 2 repossessions, right? I was a high wage earner, 2 repossessions, and I thought there was no hope. I was being told there was no hope. I was being redlined, all that. I'm sure Melissa might remember that whole episode I was dealing with before I got my first home. And then when my lender was like, all you need to do is close these repos and we're good, because they were open repossessions. I said, oh, okay. Got them closed. Next thing I know, I got approved for a house. So like, with a good mortgage rate, a good interest for all of that. So don't let your credit stop you. Talk to your lender.
Don't let the thought. It's not don't let your credit stop you. A lot of people stop themselves. Like you said, they might be stopping themselves because they're afraid to let. My number one thing that I get is I'm not ready right now, so I don't want PJ to pull my credit. First of all, he just said he was going to do a soft pull. They don't know that because they have already talked themselves out of it. I don't care if he did a hard pull. What I tell people is, who cares that he's doing a hard pull? And then they say, well, it's going to be like 20, 30 points off my credit report, or it's going to look like something on my credit report, but are you trying to buy a house or not? Are you trying to do this, or are you trying to make moves? Because I would rather the credit hit and me end up in the house. Mm-hmm. So don't like self-doubt and don't like self-talk to where you are not getting anything at the end of the day because I didn't want Tamiya to see my credit. I was like that for like 5 seconds. I was like, oh, I want to buy a house. I want to get in a position to buy a house, whatever. And I'm going to go to Tamiya. I'm going to ask her, to do my credit. And then I was like, well, I don't want Tamiya to see that I have bad things on here. Then I was like, girl, get over it.
That's my job.
Hey, you're right.
Hey,
you're right. Look, I tell clients, hey, put them to the test. Mm-hmm. That credit repair to the test. Yes. You know what I mean? Bring on out there. Hey, because look, once you build a relationship with a good person like Tamiya, somebody's really making moves on that credit, who cares what's on your credit? Right. Right. It's great. Come off. It's coming out.
Exactly.
So nobody cares. But it's funny how you said people are scared of the unknown. And then now I gotta admit, I know we're live, but I gotta admit, I'm bad for telling people, but your credit is a 530, but you didn't pull it.
Yes.
It's already got character marks on there.
Right.
Let me put mine on it.
Right. But another thing is inquiries are one of the easiest things to get off, especially now more than ever. And when you are shopping for something, whether it's credit cards, a house, a car, you can literally pick up the phone, call the credit bureaus and say, can you remove this? I was shopping. And they'll be like, all right, cool. Because the inquiry, and you have, I think, like 30 days to do that. After that, then it will stay on for 2 years. but they understand that you're looking, so your credit needs to be pulled if you're shopping around for something, right? So that's pretty simple to remove. And I remember when I purchased my home, again, like Melissa said, if you need your credit pulled so they can see your credit score for your mortgage, the mortgage lender is going to ask you about the inquiry, and you can say, I was looking for a mortgage and I got you guys. So as long as you explain it, it sounds reasonable, you're good. And then it's just 2 points. It's going to go right back up. So it's not a big
I
deal.
don't care how many points it is. Are you going to be in your home at the end of the day? Do you rather not have Tamiya or PJ look at, and then you're still in your apartment complaining about your landlord raising your rent? Or do you want these little hits on it and then you're in your house paying your mortgage? That's the way I look at it. So
Right. And I want to say this right here, and I'm not gonna hold you guys up. Back on those rates, whenever somebody comes to me and say, me and Melissa talked about this, about, hey, well, the rate's too high. I said, guess what? There's no rate that I can give you that's higher than that 100% interest you're paying on that rent. There ain't no rate. So please, you know what I mean? So there's no rate I can give you.
And this is what I tell people as well. This is my last minute before I let y'all go. When you leave the landlord, whether it's an apartment or you're renting a house or a condo or whatever, when you leave, what are they giving you? What parting gift are they giving you? Have you ever got a parting gift when you were renting? No. Not only did they not give you anything, your security deposit, which is due you, they will find anything. I'm talking about, you could have left a piece of cat hair on the
you're right.
on there, and they're like, oh, $2,500 security deposit because you left one piece of cat hair. You know what I mean? So they will find any reason to not even give you your money back. You're not walking away when you leave a rental. You're not walking away with $0. I always tell people, even though it's a 30-year mortgage, if you want to move, and Tamiya can attest to this because Tamiya bought a home and then moved clear across the country, sell that house. When you sell that house, what do you get? Equity.
That's right. And I did what PJ's customer did. I paid off all my credit cards and everything. I watched, and I had $20,000 worth of debt. So after I sold the house, I paid off my credit cards, paid off my bills, went shopping a little bit, put some in. I still had money left over. Then I had money in reserves. So I knew I was moving, and I went, got my score back up. Life was good. But you can do that when you own. Like Melissa said, you can't do that when you rent. That little $2,500 security deposit, it seems like a lot then, I guess, but you're never going to see it. You're never going to see that back.
So call us.
Right? All right, you guys. Well, thank you. I'm going to wrap this up. And then, but thank you guys so much. This was really cool. I like this Zoom meeting a lot. And everybody else, again, I posted you guys information up on Facebook, but it came out weird, but don't worry, I'll straighten all that up. But I'm gonna post this everywhere. You guys can reach Melissa, you can reach PJ. Other than that, we're gonna wrap it up. You guys have a good night. I'll talk to you later.
Thank you. Talk to you all later.
Okay. Yeah, bye-bye.